Welcome to another episode of Stock Talk. This is episode 30, and my name is Amin Raina. I'm an investment coach here at Sage Investors. And today I wanted to chime in a little bit on the big business news of the day, which is Microsoft purchasing LinkedIn for $26 billion and change, representing about a 50% premium over the initial closing price, I guess, previous day. Interesting that the stock went up. LinkedIn went up about 50%, but year to date it's still down 14%. So ideally, did they get, if you're a LinkedIn person, a long-term LinkedIn investor, you might not be feeling too great about it. So here I just want to drop a few takes on what I thought about the deal. We've kind of been anticipating a big time kind of tech deal. There's a lot of rumblings out there that Twitter is going to get bought out, or Apple's going to buy Twitter, or Facebook's going to buy Twitter. So LinkedIn kind of has been kind of on the side there, but there we go. So we've got Microsoft and LinkedIn hooking up. So my take on it with respect to LinkedIn is, and I've said this a lot of times, it's just, I don't get it. I really don't get. To me, LinkedIn is just really a glorified resume bulletin board service where you just share resumes with people, and you build your little social network of your network of your peers, and you just share blog posts and videos, and that's what I'd use it for. I don't even have my resume out there, as I run my own practice, but I share my own, like all my blog posts and my Twitter, my tweets, and special articles that I find, and things like that. And that's pretty much it. And in terms of what I've gotten out of it, my ROI, I guess, on terms of LinkedIn, it's not a heck of a lot. All I get really are endorsements from my peers, recognize me for various competencies and skill sets that I have. I don't think I've really ever gotten a client or, done a business deal or anything like that through LinkedIn. Most of my leads tend to come from Twitter. Twitter seems to be a great place for generating leads and building content and building brand awareness, more so than LinkedIn. And so I don't get it. But I do get the fact that there's a database. There's like a bazillion people on this here on the site, and there's just this huge database which is really appealing to, I guess, HR recruiters, who can go around troll people for trying to offer jobs or generate interviews and generate leads, and that's great. But that's about it. And clearly they're making money. They did about $3 billion in sales last year, but somehow made about $350 million in profit. So the company made about $350 million profit, and yet it gets taken out for $26 billion. So there just seems to be a bit of a disconnect here. And to a certain extent, when I look at this kind of transaction, I'm wondering, is this kind of the jump the shark moment for technology right now? Just this kind of rich valuation of tech companies and social media sphere, really creating that overvalue. Is this a jump the shark moment? Have we reached a peak in terms of technology valuations? And you got to wonder. It's interesting in terms of valuation. Values that I've seen out there value the company's stock at the most to be about $170, $175. So the fact that Microsoft paid about $193 for it means they really overpaid for this company. And similarities to me look a lot like the Facebook purchase of WhatsApp. A couple years ago, they dropped about $18 billion for it, for a company that just really doesn't have a lot of revenues to show for it, for that kind of valuation. It's interesting, I read a take on it today that the price Microsoft paid, the market cap for LinkedIn as of with the purchase, is higher now than 340 companies on the S&P 500, which is insane. We're talking S&P 500 is some of the richest, well-known brands out there, and this company has somehow exceeded that at some other crazy level. So right now, my take on it is I think Microsoft royally overpaid for it. And considering there's issues with the future growth prospects of the company, the stock's been tanked pretty much most of the year because profits have been slowing, and the company itself has said future prospects look pretty weak. So it's interesting why Microsoft would overpay so much for this asset. Looking at some of the other takes I've seen out there is that it's kind of almost a jump the shark moment for Microsoft, and kind of like that last bastion of just trying to get into this whole social media sphere, and And the linkages, the fact of the matter is Microsoft's core competencies are in the corporate enterprise sector. LinkedIn's core competency obviously is catering to that whole HR corporate sector. So somehow, some ways, these two parties think that, or at least Microsoft thinks that there's a value to be gained by accessing this level of content, or accessing this mailing list, really. So I'm wondering now if I'm going to get mail connection requests on my LinkedIn profile from Microsoft Office or Skype or Outlook email. So from that perspective, I wonder. So so I really don't get LinkedIn. I don't really understand it, besides the fact that it's a glorified resume posting service. But apparently there's a value there. Microsoft sees a value. I don't see it, and it's something that potentially might turn around and bite them in the butt down the road. So that's kind of my take on it. That's all I got really for today. I just thought I'd chime in on it. And if you have any more questions or comments on this or any other investing topics, feel free to hit me through my website, www.sageinvestors.ca, or you can hit me through Twitter. My handle is @SageInvestors. I tweet constantly about various market movements and my own observations throughout the day. So you can hit me through there, and hope to hear from you. So that's another edition of Stock Talk. My name is Amin Reina of Sage Investors, and we'll catch you again another time.